Hey guys, on this weekly chat, we talk about the rise of the suburbs and which suburb you need to be investing in. Key point, the spread between the value of the detached home and the condo is 139%. That's the price difference. So we see huge opportunity for appreciation. Find out now. Hey everyone, Alex Wilson here. Team alexjwilson.com for this week's weekly chat. And again, we have Kyle DeVigi, Director of Operations for Remax Wealth Builders Real Estate. Kyle, what are we talking about today? I actually haven't given you the title of what we're talking about, but what are we talking about today? Maybe I'll come up with a title on the spot.
I think we're talking about affordability in not only Toronto, but also in the GTA.
Yeah, and what we're going to call this video, we're going to call it the rise of the suburbs and why you need to put suburban investment opportunities at the forefront of your radar now. And we've worked out the different math and the reasons behind that. Toronto is always going to be Toronto. Downtown is always going to be Toronto. That is your blue chip stock. But where we've seen significant pricing increases in those areas, the shorter term rate of return may be lower. So where are opportunities where we can actually potentially see a greater jump over that shorter to medium term? In the long run, downtown Toronto is always going to win. But where can we find some opportunities? And we have to go to the suburbs to do that. And we're going to show you why. So what we're going to do now is I'm going to do a side-by-side example comparing a new development in downtown Toronto, a 1+den with parking, compared to a 1+den in the phase 2 development of Oak Village condos by Minto. So on my test case subject here, 543 Richmond by Pemberton, great builder, long track record similar to Minto Wise. And this building is going up at Portland and Richmond in the King West area. So when we look at this unit here, it's 665 square feet and it's listed for $851,990 with a parking spot. So a parking spot in this project is $79,000 and the unit itself is $772,990. The Minto Oak Village project, I can get a 1+den, 655 square feet, similar size wise, with parking, and that'll cost me $447,990. The difference between these two prices is a Toronto, downtown Toronto, apples to apples comparison is 90% more than this Oakville condo. And rightfully so, it's downtown Toronto. It should be more expensive. But now, let's look at the rent side. So what's the rental difference between the two? Am I getting 90% more rent in downtown Toronto? So let's look at what today's rent is on these projects wise. So 543 Richmond Street, my expected rent with a parking spot for this 1+den product is $2,700 per month. I picked a building just right around the corner, 111 Bathurst, similar size wise, with a den that I could actually use as a second bedroom with parking. Recently rented this month for $2,700. Minto Oak Village Phase 2, looking at similar new developments in that Dundas and Trafalgar area, 1+den product with parking, you're looking at $2,050 per month. So $2,700 for the downtown condo, $2,050 for the Minto Oak Village condo. So downtown Toronto is getting 32% more rent than Minto Oak Village. Not 90% more rent, 32% more rent. So I'm paying a premium to buy downtown, but I'm not getting that premium back on the rental numbers wise. So that means my actual cash flow numbers are much better in Oakville versus downtown Toronto. So if I want my money to work harder for me, I'm better off going to Oakville versus downtown Toronto. Now, again, I said, downtown Toronto is my blue chip stock. you should have some downtown Toronto in your portfolio wise, but how do we augment that with some other higher returning assets in that portfolio?
Alex, it's not all about cash flow either.
No.
Because appreciation is a big factor when you're looking at your overall investment
Exactly.
as well, right?
Oh, great segue into what I want to talk to next. So now I've said, okay, suburbs. There are lots of suburbs. If we go all around Toronto, from the east over to the north to the west, we could be in Scarborough, we can be in Ajax, we'd be Whitby, we could be north in Vaughan, Richmond Hill, Markham. We can go out west. We have Mississauga, we have Oakville, Burlington, Hamilton, Waterdown, all these different options. So why am I just saying Oakville as the opportunity? Well, number one, and you've seen it in previous videos, Oakville was rated the number one place to live in Toronto. Also the number one place, not in Toronto, sorry, the number one place to live in Canada, not Toronto, number one place to live in Canada. Number two was voted the number one place for new Canadians. So the GTA, we're a huge hub for immigration. We get the most new Canadians coming into the greater Toronto area. And if I'm the number one place for new Canadians, that's going to be an attractive place for me to invest. Number two, when I look at these other areas and the price per square foot that I'm getting, specifically in the Minto Oak Village project, with parking, I'm getting in under $700 per square foot. Where other suburban areas, I could be over $800 per square foot in those other suburban areas. So I'm getting voted the number one place to live, but I'm actually getting it on a discount compared to some of the other suburban areas that I'm looking at investing in. But the most important reason to look at specifically in Oakville and narrowing it down there is when I look at the spread between the average price of a detached home and the average price of a condo. So if we go all the way back and look in Toronto-wise, and we saw that massive year where condos jumped 1 year 20%, the spread between the value of a condo and the value of a detached property was at an all-time high. It was a massive spread, and there was a lack of affordability on the housing side compared to where the average price of the condo was. And then what we did is we ended up flatlining on the freehold property wise, and people couldn't afford to buy houses anymore once we put the fair housing measures and tax implications and stress tests in place. So people were forced to migrate to condos wise, and we saw a jump up in condo values. And that's where we saw the big jump of 20%. So now I'm looking at the spread in Oakville wise, and it's massive. So the average price of the detached home is $1.332 million. That's the average price of a detached home in Oakville. And the average price of a condo is $557,000. That spread is 139%. The gap between the average price of a condo and the average price of detached home is at 139%. That is a massive gap. So what that means, and what I know it is, we know that affordability is flatlining in that 1.3 range. There's a lack of affordability. People just physically can't get the mortgages at that price point. So if I can't get the mortgages at that price point, then where will I go? I'm going to go to entry-level product. And that's where I flow into the condo market in Oakville, because that's all I can afford if I'm that young professional, downsizer, in-law moving into the area, new Canadian starting a family, can't get, or do I don't necessarily want that 1.3 million detached home. Well, now I'm going to start off in the condo wise. So with that spread, if I'm forward thinking, you always got to be forward thinking. Everyone can make money on what's available right now, then they're all going to buy that. If you're jumping in at the end of the game, your lift is going to be minimal versus the people that got in ahead of the game. So this is why we do these videos and talk about this and do this analysis. When I see the 139% spread, to me, this looks like a ripe opportunity for appreciation on the condo side. Now, Kyle, remember when we went to that presentation, we heard all the builders and everything like that, and they were talking to us, and the one builder was saying that they look as a builder wise, where's the massive spread? Where is the that's not dystopia or distortion, or what word am I looking for? The D word. Whatever I'm looking for. It's on the tip of my tongue. But there's a disproportionate difference between the average price of the condo and the average price of the freehold property. When they have a disproportionate spread between the two, they see it ripe for opportunity. And that's what we see right now as investors wise, 139% difference wise. This looks like a great opportunity. If we look at the vacancy rates in the Halton region, 0.6% versus 0.7% in downtown Toronto, there is a scarcity on these property-wise and a lack of rental product in the Halton region area. So when we look at that, we see this as a ripe opportunity for investment-wise. And so if you want to diversify your portfolio or add some good cash flowing opportunities that also have the built-in area that we see that there will be a jump in values wise, I think Oakville has to be your number one choice. So that's why the rise of the suburbs, people can't afford to live downtown Toronto anymore. Doesn't mean people aren't going to be living downtown Toronto, but where is that rise going to be? And Oakville we see as the opportunity for 2019. And anything else on that?
No.
Awesome. Well, great, guys. So if you have any questions or interested in upcoming developments in Oakville, please send me an email, contact@alexjwilson.com. And here we are, making real estate dreams come true, building generational wealth, and helping you develop financial freedom. Okay, talk soon, guys. Bye-bye.
Bye.